I'll give you a real life example. I have quite a few properties, and in particular, one comes to mind. It's in Texas. It's struggling property, and there used to be a swimming pool, and for some reason, the prior sellers poured concrete over the swimming pool. And to this day, I still don't know why. My guess is maybe it wasn't up to code, or maybe it was just too expensive to maintain. I don't know why, but it's Texas, and you need a swimming pool. And I've been trying to figure out, what do I do with this? And I have asked property managers after property managers and other owners, and I get so many different opinions, Like you'll hear things like, leave it as it is, why bother doing anything with it? The other thing I might hear is turn it into a dog park because you have a lot of pets and people appreciate that. And I want to take it a bit further. Okay, well, how much can I push my rents up by? And no one can give you that. It's like, well, buddy, it's your property. You have to figure it out. So I'll ask my management, and it's the same story there. Like, okay, we shouldn't do anything because people might congregate, or maybe you should turn this into, a picnic area, or pool area, or whatever. But that simple decision, there is a lot, and there are second and third order consequences of that decision. Let's say I want to put a pool back there. So I'll get a quote, but then, there's all these unforeseen expenses, and there's no real way to plan and measure that out and have everyone coordinate. So these decisions can be very draining, and the consequence of getting it wrong is only sometimes known way after because you don't have data at your fingertips.
Yeah, and I think that's why there's this protection of the status quo. Like, the first people you talked to said, don't do anything, leave it as it is, right? And I think is one of the underpinnings of like this trend in real estate. Like, everyone asks, like, real estate is the largest asset class. Why hasn't it adopted technology in a more meaningful way? And I think what you just said is exactly why. Like, if the data was there to clearly make decisions, people would be out there making those decisions. But because they don't know, like, if a kid fell in that swimming pool and they were sued for $1 million and they had this whole thing, they're like, we're gonna fill every pool in our portfolio. And maybe it was the right decision for that owner, but like, if you're gonna reposition this, asset from a C to a B or a B to an A, like, one of the best ways you can describe it as a luxury place is having a pool, having a dedicated lifeguard, and being able to like do that, and that can translate into real value for you and your investors as well.
Right, and right now times have been good. Every real estate fund has been delivering fantastic results over the last 5-10 years, and in some ways it's hard to know what behavior and what actions have worked well versus having property, letting it sit there and letting it appreciate. And when we do inevitably encounter a downturn, because real estate comes in cycles, or we encounter a tough period, it's at that point where someone has to draw on that experience. Like, how do we add value to this asset? What is the game plan? And it's hard to know what worked and what didn't work if you're not preserving and collecting and measuring.
Yeah, and I would go a little bit further than that and say that, like, I think the market we're in is unprecedented, right? Like, people are regularly buying properties at a sub 3% cap rate. And if you're going to acquire properties at such an aggressive valuation, you need a differentiated pro forma or management plan, or both ideally, right? And so you need to be able to say, like, I can confidently say, we can squeeze more NOI out of this property, out of this asset class, out of this repurpose, out of this value add. And I think what's really valuable is that people know they're paying a high price. It's not like people have this blinders on them. And I think what is happening is people are becoming more driven by the data. They want to see better data, more interesting data, more unique data. And I think one of the ways people have done this is, like, more and more people are requesting demographic data from their property management system, trying to understand, like, where they should market to, who they should market to, what are their best clients, what are their worst clients. And it really creates this new culture of decision making. And I think it's the same reason, like, virtual leasing is picked up. It's a time like COVID happened, like, you couldn't give it to them. And what I think is happening now is, because these sort of sky high valuations, like, you need the data to make a decision that is going to drive more value for you and your investors.
So to make the right decisions, you need to measure things. You need to focus on metrics. If you think about the role of a property manager, what are the metrics that matter?
Yeah, and I think the way to think about that is not, I'm a property manager, what are the metrics that are important? But you should say, look at this building, look at the submarket, look at the strategy we're trying to execute, and what are the right metrics for that? And there are all different kinds of owners, and they all have different goals. So if you're a small owner and you're trying to, preserve cash flow, have some sort of depreciation bonus, taxes, you may not have an aggressive plan, right? That manager or that owner is really going to want a basic sort of like high level occupancy, low costs, kind of go there. And as you get to more sophisticated owners, like let's say you're going to do a class A multifamily lease up, right? Like this new building in San Francisco. The things you're going to care a lot about is your traffic. You're going to think so much about it. It's going to be the most important thing to you is how much are we spending on marketing and how are we able to do that? And like, what are the value concessions we're giving? Almost all new buildings are giving concessions because the owner needs to meet some requirement from their lender. And likewise for a value add, I think what's interesting, value add is probably the most commonly executed strategy in property management, which is you take a building, you make it nicer. And those kinds of owners are really focused on what's the rent growth? How much are we spending on CapEx? How long does it take to deliver these units? And I think those are just one way to think about it to start.
There's a disconnect sometimes between what owners are measuring and what management are measuring, and I've experienced too. Managers aren't necessarily, I don't want to say incentivized the right way. Let me frame this as, they're not the most financially literate.
Definitely.
And the difference between a regional and a VP sometimes might be the VP is able to take a more of a holistic portfolio-wide view and really focuses on metrics that matter. What are some of the metrics that the on-site team might focus on versus the regional versus the VP versus the owner? Could you give us sort of a breakdown of the roles and the metrics that each level of role focuses on?
Yeah, I think that's a really good question. So let's start at the owner level. So the owner is going to have an asset manager. This asset manager could be the owner of the property or a dedicated role. And this person is really thinking about in terms of portfolio, right? When is the right time to sell the property? When did it achieve its business's goals? And a lot of times what they're going to look at is NOI. They're going to want to have the highest potential rents. They're going to pay a lot of attention to net effective rents. Okay, like where are our lease trade outs? Compared to the last person, what's the new person paying? Okay, like really basically said. Then kind of the next step in the value chain, and on the property management side, this is where it transitions, is the regional manager, right? I think this role of regional manager, especially in the last 10 years, because of these rising valuations, it's really become a blended role. You can't just be non-financially savvy, you have to be a little bit, right? I think this regional manager is really paying attention to individual properties. They're trying to figure out which ones have the highest spiking expenses. They're thinking a lot through which ones are really able to meet the pro forma. And then on the property management level, which is the person on the ground, on the site level, they're really thinking about the most basic nuts and bolts, which is, how is our occupancy? How is our occupancy in 30 days, 60 days? And then also how are our work orders going? Like, did we go over budget a lot on any specific ledger? And I think one of the challenges kind of in this new era of more data, more information, like a more aggressive business plan, is that we have to find a way to bridge what the property manager is looking at and what the asset manager is looking at. We need more financial savvy, a way to get everybody kind of aligned around the same metrics.
Where does the disconnect happen usually between owner and manager?
It's hard to say because I think it happens all the time. And kind of coming back to incentives, if you are a fee manager, meaning a property manager that manages for owners and investors, you're really thinking about gross rents, right? Like, what is the highest rent I can get? And I'm going to get paid on a percent of that. And that's a good goal to have because you would think that aligns there, right? Where I see a lot of the disconnect is how long has the unit been sitting vacant, right? If it's been 45 days or 60 days, is the problem the pricing? Is it where the location is? Can we offer a concession? Are we spending enough marketing on marketing? And that's where we start seeing the disconnect is why is something happening? If there's a problem, why is it happening? And I think that's kind of the biggest problem, that there is no data, they're not using data effectively, is everyone has their own different idea, right? Like the property manager is going to say, it's our competitors. Our competitors are always here, right? The regional manager is going to say, well, we priced the unit too aggressively, right? The asset manager is going to say, well, it's got to be a problem with the property manager. So once everybody has the data to make that sort of clear distinction, I think we'll see more clarity between those parties.
sometimes the issue is that you're flooded with a lot of data as well.
That's true.
And as an owner, you have a hard time synthesizing this data, and so you really just want to understand. This is sometimes why you have reports sent to you, and then you'll have a weekly, monthly, whatever performance review meeting where, okay, you sent me all this data. This is literally how some of my meetings go. You sent me a mountain of data. What matters here? Where shall I focus my attention? Because there's so much here, and it's hard for me to keep a tab on one property. And I think this is something property managers should appreciate, that your owner might have a portfolio. And for them to take one report and then another report and another report, there's a lot of context switching that needs to happen. So sometimes you need a narrative around the metrics. Can you talk to us a bit about that?
Yeah, but before we get into that, if you don't mind me kind of just asking here, for context for everybody else, how many pages is like one set of reports that you get? Like end to end, the total number of pages?
It varies property manager to property manager. Sometimes you're just simply dealing with one email with a table, and I've been pushing for bullet points that explain what's going on in the table. And then you'll get this series of PDFs, or you might get one Excel sheet, and it's a monster Excel sheet with macros and everything, followed by like 30 different tabs. And one tab relates to another tab, and some tabs are so tactical. It's literally like the financial ledger, and it's overwhelming, honestly. So you go back and you look at the high-level metrics, and you're stuck. You're basically dealing with high-level metrics, and then you click on it, and the spreadsheet gives you row X and sheet tab this, tab that, and you can't correlate in your head. What's driving this? What are the key variables?
Yeah. I mean, this is exactly the state of like communication and metrics and data-driven thinking in real estate, right? And I mean, just to push it a little bit further in sort of the empathy piece here, like if you have 1,000 units, which is not a lot. I mean, for a lot of people that might sound like a lot, but in the world of professional real estate, that's not a lot, right? And each of those send you a monthly packet with 50 to 75 pages. And like your expectation is to go through all of them. That's so much information to do. And I think another challenge you just described is if you're using multiple fee managers, or property managers, there's no consistency between what they're going to send. And one of the biggest challenges, there may not be consistency on a month-to-month basis, right? Like if the property manager leaves and then there's this new one and they do it a little bit differently because they worked at Greystar and that's how Greystar did it, sure, that's helpful, but you cannot compare that information for this month compared to all previous months easily. And I think the most important thing that when we talk about data, the two things we need really is unbiased regular snapshots, right? Here's the state of the business. This is how we're doing. And then just repeatable, right? Every week you can see this. You can see this one went up, this one went down. You can make your own correlations, your own expectations. You can build your own fluency here, right? But we talk so much about the metrics. I think it's really important that you brought up this idea of communication. Narratives are so important. Narratives is this idea in real estate that every single report should come with a one paragraph or 3-4 sentences saying, why did this happen? And I think this is actually one of the coolest parts about real estate is this idea of the narrative. It's so pervasive. It's so much you can learn from, is that you should consistently present data, which is unbiased, regularly snapshot it, consistent so you can compare it over time, and then give your best guess as to why it's changed, right? And if you have your property manager copying and pasting information from their property management system, they don't have the time or expertise to go ahead and really think about it. They're just wasting all their time on reporting.